Talking about the sector, we are seeing that insurance in particular seems to be benefiting, or so they say, from the ongoing economic recovery of the country. Is this true?
So even during those turbulent times, even then still the rupee, we saw a slight moderate improvement of 12%, which was relatively still at 320 odd levels, which was very high still for imports. But nevertheless, with all that, the insurance industry grew at still 7.6%.
Wow.
With all those improvements and the rupee again appreciating a further 10%, what we saw was that the economic activity and stimulus has happened. So of course, with all those kind of improvements, ideally there is more spending patterns, consumer demand will increase and the customers will come out to spend more money. Savings are much more. In a environment where interest rates are lower anyway, people will tend to spend more and try to find other ways of making a living. People look at it as an investment scheme. So we have all kinds of different types of riders that you can add on to a base product. You can have it as health covers, you can have other types of coverage of critical illness and cancer products. So there are so many varieties today.
Lots of innovation. Definitely.
Yes, innovation that has happened. But so what we have seen is, irrespective of other economic activity in a country, insurance will always remain resilient in terms of mitigating financial risk.
How is the sector performing in terms of balancing the profitability aspect and the expenditure aspect?
Right, okay. During the long term period, we have captured into the high interest rates. We have managed to service our policyholders and shareholders alike to keep that rate consistent throughout the year. So this profitability is not only the expense, it's also about the investment income we receive and the revenue we receive also. So the insurance companies have been able to have these long-term investment plans in place, so safeguarding the funds.
Right.
So this is one of the reasons profitability also has not had a huge impact. So in fact, profitability has increased year on year. What we see is that profitability in this current year also will definitely improve if we go in the same momentum.
The forecast is good.
Yes, forecast is good, yes.
Right. Sri Lanka's insurance sector has always been a very resilient one. We spoke about all of this and more with Himani Weerasekera. Stay tuned.
For 30 years, LMD has been the voice of business in Sri Lanka, capturing the pulse of the nation's corporate landscape through its iconic covers. Each cover tells a story, from the first edition in 1994 to the present day, narrating key moments, leaders and trends that have shaped Sri Lanka's business ecosystem. Over the years, LMD covers have featured thought leaders, business pioneers and game-changing innovations, reflecting the evolution of industries and the economy. As we celebrate 30 years, these covers represent more than just publications. They are a testament to LMD's legacy of excellence in business journalism and its unwavering commitment to being Sri Lanka's leading voice of business. LMD, Sri Lanka's voice of business, a legacy of 30 years.
Hello and welcome to LMDtv. The topic of conversation today is insurance sector financials, and I'm here with the Chief Financial Officer of Union Assurance, Himani Weerasekera. Welcome to the show, Himani.
Thank you very much. How are you doing?
Doing well and looking forward to talking about the sector with you.
Yes.
Talking about the sector, we are seeing that insurance in particular seems to be benefiting, or so they say, from the ongoing economic recovery of the country. Is this true?
Right. Okay, thank you for the question. Now, I'd like to just explain a little bit about how the industry has performed in the past related to the economic activity. Now, if we take, of course, we have many turbulent waters we have gone through as a country. So economic activity has been very, very suppressed during this last few years. So if we take 2022 as a base year, we of course had the economic crisis. So we saw a GDP having a huge hit of 7.3%. It was negative. And then we saw inflation having hyperinflation of over 49.2%. Then there was the interest which spiked up, which was over 13%. and we saw the rupee depreciating over 44.8%.
Yeah.
So with all these kind of challenges that we faced, we have found that during turbulent waters or anything, maybe because insurance is considered not something like a saving scheme, it's more like a financial mitigation risk factor that we take into account. Because of the nature of the business, we have actually, it has been very, very resilient through all the difficult times. So even in 22, we saw a 10.5% growth, even during the difficult year. So if we fast track to 23, so 23 also, it was, as you know, economic recovery year.
Yes.
So 2023, we saw a lot of progress, restructuring, debt restructuring, then IMF loans came in. So with all the positive tourism picking up and all these other inputs coming in, foreign inflow and cash flow coming in, the GDP did have a huge rebound at the latter part of the year, but it was nevertheless still 2.3% negative.
True.
And interest rates was still very much at over 13% still. And inflation was moderately lower than, of course, the previous year, but still was at over 16%. So even during those turbulent times, even then, still the rupee, we saw a slight moderate improvement of 12%, which was relatively still at 320 odd levels, which was very high still for imports. But nevertheless, with all that, the insurance industry grew at still 7.6%.
Wow.
So you can see that during even the turbulent waters, the insurance industry has remained very resilient and very stable and performed consistently year over year. So if you take 24, which is last year was, of course, a rebound year where we saw a fabulous GDP increase of 5%. Then inflation came down rapidly to it was deflation of 1.71%, and interest rates came to a single digit. So with all those improvements and the rupee again appreciating a further 10%, what we saw was that the economic activity and stimulus has happened. So of course, with all those kind of improvements, ideally there is more spending patterns. Consumer demand will increase and the customers will come out to spend more money. Savings are much more. In a environment where interest rates are lower anyway, people will tend to spend more and try to find other ways of making a living. So then they will not depend on bank deposit rates and other low interest rate regimes. So they need to move to other places. So what we have seen is GWP, even that year, last year, it will be something like 14%. So we have seen a year on year, there has been progress. So we never really had a 100% correlation with economic activity. But saying that, when we see improved economic activity, the penetration levels, all those areas will improve. And people will look for other means of, I know traditionally insurance was seen as just protection. But today, insurance is far more than that. People look at it as an investment scheme. So we have all kinds of different types of riders that you can add on to a base product. You can have it as health covers. You can have other types of coverage of critical illness and cancer products. So there are so many varieties today.
Lots of innovation. Definitely.
Yes, innovation that has happened. But so what we have seen is, irrespective of other economic activity in a country, insurance will always remain resilient in terms of mitigating the financial risk.
Lovely to hear. And I want to touch on the innovation aspect, but a little later on.
Yes.
For now, like you said, it's been a very resilient industry.
Yes.
How is the sector performing in terms of balancing the profitability aspect and the expenditure aspect?
Right, okay. So as I mentioned, revenue has increased from year to year. So we really didn't have a huge impact in terms of managing a huge problem of costs. But of course, with inflation, costs nevertheless has increased. This has been seen in all the industries.
All sectors, yes.
Yes. So therefore, there was, of course, the impact to our profitability. But I must say, one of the areas that we do look in is managing the fund. So we do collect policyholders' funds and we do invest. So in a regime where there is high interest rates, what we do is we we have to anyway invest in majority will be in bonds and bills in order to manage our capital adequacy ratios. So what we have done is during the high interest rate, we have committees involved in all these kind of fund management decisions. So we go and invest in high yields. So because of that, during the long term period, we have captured into the high interest rates. We have managed to service our policyholders and shareholders alike to keep that rate consistent throughout the year. So this profitability is not only the expense, it's also about the investment income we receive and the revenue we receive also. So the insurance companies have been able to have these long-term investment plans in place, so safeguarding the funds. So this is one of the reasons profitability also has not had a huge impact. So in fact, profitability has increased year on year. So in 22, we saw a 16% improvement, and in 23 again, there's a 5.1% increase in profitability as a industry. And you find that actually life insurance companies have had a remarkable year. Even last year, it was almost 20%, over 20% growth.
That's lovely.
That is, of course, in revenue. But what we see is that profitability in this current year also will definitely improve if we go in the same momentum.
The forecast is good.
Yes, forecast is good, yes.
Right. Himani, it's lovely to know that the sector is like performing really well, so resilient. I want to talk about another aspect of the sector. That is something that we read last year was that Fitch Ratings mentioned that the regulatory environment governing insurance in Sri Lanka is developing, which is good, but with limited transparency. From then to now, how have we progressed, if at all?
Right. Okay, so I'd like to just talk about a little about the insurance industry going back a few years, because the insurance industry is actually a very long history. It has a long history. It has over 64 years history. The first Act of Parliament came in 1961, and that's how insurance business started. But since then, regulation per se came in through a commission, and the Insurance Regulatory Commission of Sri Lanka, as of today, started regulation only in 2000. So it's been like almost a 25-year journey now. So to be fair on the regulator and on the industry, there has been many changes and a lot of evolvement has happened since then. So there are many areas that they have they bring in regulations and directives, and also 2015, and I think that was also mentioned in the Fitch report, there has been risk-based supervision that has brought in. So we don't do the traditional just financial reporting. They have monthly, quarterly, and yearly reporting we have to make to them. And a lot of these statistics are also available on their website. Anyone can review it. And also, some of this information is also to do with capital-based adequacy ratios. So there's a lot of capital asset-based regulation that is happening right now. So it has progressed a lot since the start of, and it's more or less benchmarked against other countries in this world. And it's quite, we are quite attuned to what is happening in the rest of the world. Besides that, these directives and all, we have a lot of input to do. The industry association, for example, is a very active, plays a very active role as well. So they also do get involved in when there are issues and governance or any other matter they need to take up. They are also very active in that role. So there is quite a lot of transparency, I would think, in terms of where the information is available and accessibility also to that. And also most of the insurance companies are public listed companies. So the regulatory authority actually required that all companies should be listed. There was a regulation, there was a directive issued like that, but it was subsequently amended to manage certain exemptions for certain companies if they were within a certain criteria. So because of that, there are about 10 listed companies today, and all those companies have to abide to all the stock exchange regulations, being a listed company. So all those listing rules, they also have quarterly reports to submit, then yearly reports. So all those are also on the stock exchange website.
Right.
So all this information is already available
Available.
to review if you want to look at the profitability or look at the assets or the balance sheet and the profit and loss accounts are all available there. So there is a lot of transparency. And rather just only talk about financial reporting, I would also like to touch on governance.
Yes,
So that's a
very
very important area for this industry. So we do follow the code of best practices, which is given by the stock exchange. So all insurers do follow that. So there are, on top of that, the public listed companies have their audit committees, they have their related party transaction committees, there are independent directors. So there is a whole framework of governance in place for these companies. So I don't want to touch on that with it's correct or wrong, I'm not trying to say, but what I'm just trying to say is there's a continuous improvement.
There is progress.
Yes, there's progress in terms of how we do provide governance and transparency to the market.
It's time now to take a very short break, but we'll soon be back to talk more about insurance sector financials.
Display your brand message on digital screens at prime locations. The largest digital advertising network in Sri Lanka. Emerging Media.
Welcome back to the show. We're in conversation with Himani Weerasekera, the Chief Financial Officer of Union Assurance. We covered performance, we covered regulation. Now I'd like to cover, one of the most important parts of the whole equation, the customer.
Right.
Sri Lanka is supposedly one of the countries in South Asia that has one of the lowest penetration levels in terms of demand. What can you share with us regarding the demand dynamics today when it comes to insurance, life and non-life?
Right. So the penetration levels, as you say, is quite rightly, is very low. It hasn't shown a huge progress over the years.
Right.
There are a few factors I'd like to touch on why. It's currently less than 2%. You would probably know that it's less than 2%. In India, for example, it's 3.7%. The benchmark is probably over 10% right now. So the rates have improved in developed countries much faster than the developing countries.
True.
So although it's one of the, as I said, with a long history, the dynamics of how it has evolved is very still at a emerging level.
Yes.
That's the reason why we haven't really progressed. We have seen, as I mentioned, revenue growth, we have seen profitability growth, all those numbers are there. Economic activity has boosted. But if you look at even things like GDP per capita income, it has improved to $4,500 maybe. But the issue is that the distribution of wealth among the population of the 22 million population is not equal. So we still see about 1/3 on the poverty or below poverty line still. So this distribution of income and standard of living has an impact on, of course, the consumption, the demand. So that's one of the things that has hindered probably to really progress. And there are a few other factors. So one thing is awareness. It's very difficult sometimes to go to the rural community, for example. They are not digital tech savvy. The literacy is very lower there. And it's very difficult for them to understand. So the lack of awareness, the lack of understanding. And also we are the facts are economic, social, and psychological factors. So that is the economic factors that I was mentioning. So the other factors are the social factors. So as we take, as communities, we are very family, which is a great thing. We are family oriented. But the other side is we are all dependent, very family centric. So still, although we have aging population also, we still see that elders like to depend on their family members and the continuity. So, and the other issues are things like life insurance. One of the problems is it's a long-term commitment. It's not something you can do 1 year and unless it's something just like a health cover. So so people find that it's difficult to be committed, and they find it that sometimes a short-term solution is better than a long-term solution. So they don't want to think that far. And then there are a lot of people who are earning not on a monthly basis, and they don't have regular income. So there are a lot of issues that has an impact on why insurance penetration has remained low. So saying that, I mean, there is a lot of opportunity. When you say it's only 2%, less than 2. Right. So there is a huge segment of that we can capture into the market, and that is what we are all endeavoring to do. But it's a slow progress, no doubt. But as you are quite asked, the demand dynamics has changed over the years, though. So although we have all those concerns, but we see great opportunity having partnerships, and we also see there are different types of covers that people look for now. So we traditionally, for example, if you take life, you only have a basic life cover. But today you can add all kinds of riders onto it. You can add health, you can add disability, you can even add a pension plan. So those things added on to the basic cover will probably suit somebody's requirement much more. And people also look for a more tailor-made solution. So it's not a standardized product anymore. So all these things we do understand, and we do want to cater to all the requirements on a more personalized, customized product. So and the other things I like to mention is that now if you look at the younger crowd, I mean, you get a whole lot of millennials and Gen Zs now. So they use, of course, the social platforms more than anybody else. You'll always see them on a phone, for example. So they like to work on apps. They like to use online platforms. And also, they are very much aware of what's happening much more because of accessibility to information. So if you notice that a lot of people who want to look at something or buy something, I'm just saying any product, they like to see what the reviews are, what the comments are, how many followers, what are the how many likes. So there's a lot of information out there for this generation to look at and decide. So I think those platforms can be used extensively to cater to that segment particularly. And that's another market that you can see is interested in insurance products, because what I do stress is, again, it's protection and managing your risks. So it could cover your family, your loved ones, you can protect your home. So now, for example, general insurance has had not a, of course, when during the 22-23, the imports were stopped of motor vehicles, and motor vehicles is more than 50% of their revenue. So they were heavily impacted during that time because they really could not grow because they obviously there was nothing to insure except for the previous cars that they were already there. So those things do hinder the development of certain sectors. But now what we see is in 24 onwards now, with the opening up, what we are hoping and we are expecting is things to evolve around different types of products in that arena also. So again, I'd like to stress is that a lot of people want a more customized approach. And it doesn't mean that they need to physically come. So we have click apps nowadays, which you can download. You can open a policy, you can make a claim, you can get your payment through these apps. So it's a very interactive in a different way through the platforms now. And technology is very, very important for the future in all these industries.
It's nice to see that there's like a level of sophistication, innovation coming in, because Sri Lanka has been said to not be that sophisticated in terms of products, but it's nice to see that, all of these, a lot of progress here. Am I correct to say that the market is driving these innovations, or is it the other way around?
Well, I think it's both ways. Yes, you could say that there is a demand for these things, and when the other industries are doing these things, like, now, for example, data analytics, AI is a key word everywhere you go. So those information we can use actively to make product pricing, to understand the consumer behavior. So there is a lot of information out there that we can actually use to understand also the consumer demand behavior. So yes, on a side that is a demand, and the other side is we also see the development and sophistication of people. So we need to be able to cater and manage. So for example, now there could be even products like, you can just add on as you go. So you may be single today, but then in another few years we get married, there'll be childbirth. So there'll be added products as you go on.
Nice.
So that is a kind of a flow that you don't have to worry and think about. You have peace of mind. You don't have to worry about covering all the other financial risks. So there's a lot of flow in what we're trying to do is provide a very seamless operation so that people can feel and trust and feel that they are actually investing in some kind of a product that we will look after them as well.
Lovely. Himani, it's been such a lovely discussion, but unfortunately we are almost at the end of it. As a final question, if I ask you, I mean, like you said, the sector has been recording really good performance, resilience. Do you see this continuing for the rest of the year? What are your forecasts? You covered this in one of your answers, but if we can get into specifics.
Of course. So we have just finished the quarter 2025. So I'm pleased to say that 2025 has also been quite an improvement. So as I said, life insurance improved like for 20% last year, and it was about, I think, almost 10% for general. So when we see those factors last year and we see improvement in economic activity this year, yes, definitely we expecting an even better performance than last year. So this is what we're expecting. But I have to say this, as you would know, this geopolitical, these concerns that have come up is something which we are expecting it will get solved and it probably will not have impact this year. But we don't know the consequences in subsequent years. But with this current situation, we're expecting a moderate more GDP growth of 3% this year. But that saying that we will outperform that performance, and we have continued to do that over the years. If the economic activity and there is no serious disruption. So definitely we can perform really well this year as well, providing all the other economic indicators, which is out of our control.
For sure.
Yes. So with all that progress, I think, but as I said, like, during the turbulent times only that people need insurance is actually when
it's risky, yes, when there's uncertainty.
Exactly. That's how people should perceive insurance products. It's not when everything is good. It is actually when, so for example, general insurance always honored their claims when there were floods. During the COVID time, I think people saw more and more importance of health cover because there was more people, of course, unfortunately, there were untimely deaths. So all these things did get covered because they had insurance. And these kind of disasters, catastrophe, all those things get covered when you do have insurance. So I think one of the reasons it's very resilient is also because we do cater the downside of any calamity or concern that happens. So we address those risks as much as possible. So that is why I think insurance sector, we find it very resilient, and we do expect it to continue in the same way.
Lovely. Progress is protected.
Yes.
Thank you.
Thank you.
We've been in conversation with Himani Weerasekera, the Chief Financial Officer of Union Assurance. Thank you very much for a very insightful conversation. I enjoyed it.
It's lovely being here.
And thank you to all our viewers for joining us. Until next time, take care.
Don't forget to subscribe to our YouTube channel and follow us on Facebook, LinkedIn, Instagram and X. Thank you for watching and stay safe.